Hello everybody. This is a video on the textbook example of chapter 1 level 3. The chapter 1 level 3 in textbook will help you to do the chapter assignment that is in level 3. So here Paul is setting up a preliminary budget for each quarter of first year of production and a combined year to end summary. So there are two things he is looking at. One is a quarterly budget and one is a final year end summary. So that's all you have to prepare in this assignment. There are things, you start with a fresh spreadsheet and start typing number of shoes per pair. Is 2. Overhead percentage of labor, it is 25% of the direct labor cost, that is 0.25 expressed as percentage, 25%. Then sales volume, that is number of pairs. Selling price per pair is given. Item, cost per shoe, cost of goods sold is calculated from the materials, direct labor, overhead cost. So the cost of goods subtotal, selling expense, and then you get the projected earnings. So the number of shoes per pair you have to create from the scratch. I repeat, you have to make this from the scratch for the assignment. Take a spreadsheet which is entirely new and start typing in the numbers. So the number of shoes per pair is 2. Overhead percentage of labor is 25%. This is TCH first quarter budget. Again, don't just copy these numbers because for the assignment the numbers are different. Some people have repeated the numbers from the textbook and submitted it last time, which is wrong. You have to look at the page number 69 and you are looking at only two options there, low priced and high priced. In the textbook example there are 3 options, that is low priced, medium priced and high priced. So when you do the actual assignment, please go to page number 69 and do the assignment. Hope it is clear. What is overhead expenses? Overhead expenses are all costs of the income statement except for direct labor, direct materials and direct expenses like accounting fees, advertising fees, insurance fees, interest, legal fees, labor burden, rent, repairs, supplies, taxes, telephone bills, travel expenditures and utilities. It is actually 25% of the labor cost. That's what is there. Are you getting it? So what exactly is happening here? Okay. Once you are aware of, once you make this spreadsheet to start with, this is the first quarter budget. There are values given in the textbook. This is again from the textbook, page number 54. We are looking at the materials cost is 50.15 per shoe. Direct labor is 7.33. Overhead cost is 1.83. Selling expense per is $5. This is cost per shoe. You remember there is 2 shoes in one pair. So you have to multiply by 2. Got it? So the first question is how to calculate the revenue. So the revenue would be the volume sales and how much it costs, how much consumer pays for each pair, that is 200, right? 200 into 1000 is 200,000. That is the revenue. So it is C5, which is sales volume in number of pairs multiplied by selling price per pair. Once you do that, you can just copy it to the next two columns to get the medium priced option and high priced option revenues. It's so simple. So that now we got the revenue for 3 options. Then the next one is the material cost. How is the material cost is calculated? This is the cost per shoe multiplied by the number of pairs multiplied by the number of shoes per pair. Notice that the number of shoes per pair is not changing at all, because for all the calculations we require number of pairs per shoe to be 2. So in order to make it not changing throughout the calculation, we are going to use something called absolute referencing, in which you put $sign in front and following the number 2. So $1. This is $1. So what exactly $1 is? It is actually 2. Make sense? So for making it absolute, or in other words, to make sure that the whole calculation uses 2 unchanged, you use something called absolute referencing. In absolute referencing, the value you put is not going to change throughout the calculation. So the next thing is the material cost, the direct labor and overhead. I repeat, the material cost, so row wise, first row, second row and third row, it changes. 2 doesn't change, so we used absolute. This changes row wise. So in order to make it row wise changing, you are going to put absolute sign in the beginning only. In the beginning only. So you are going to put absolute sign in the beginning only. In that case, what happens is Excel will naturally recognize that you are actually wanting Excel to change row wise. The next one is column wise. This is column wise. You want Excel to recognize 1000 followed by 750 followed by 350. So it should be changed column wise. In that case, you use the absolute sign in the before the number only. So it is C $5. It is C $5. In that case, the column wise, it is going to recognize the change and choose the correct number. So we want Excel to choose 1000, 750 and 350. You should clearly understand what is the difference between row referencing, column referencing and absolute referencing, and how it is being used in this spreadsheet. Once you recognize that, you are going to multiply the absolute referenced value with the material cost, direct labor and overhead, and multiply it by, so what is the total cost of the materials? It is number of shoes into number of pairs into the materials used, right? So each shoe uses for $50.15 materials. We are preparing 1000 shoes, and once we prepare shoes, we are not going to sell one shoe, we are going to sell 2 or in pairs. So we have to multiply. Each pair is $200. It's not each shoe. Each pair is $200. We have to multiply by 2. So once you do that, You just copy towards the right and also downs. Similarly, you can also, you see what we did till now. We have absolute reference, we row and column referencing followed by that. Once you do that, you are now very similarly we are going to do for the selling expense. $1 into 5, $5. So in that, and then copy towards the right. Similarly, we calculate one more thing here, that is the cost of goods subtotal, cost of goods sold, that is the cost incurred. So revenue minus the cost incurred will and along with the selling expense will give you the projected earnings. Remember, we are not looking at the tax or anything, we are just looking at the budget. Okay, preliminary budget for first quarter, second quarter and third quarter. You can repeat creating this 4 times, or I will show you an easy way. It is fully up to you to do. Once you create this one, you can also start creating from the scratch. But remember, it is all going to be the same in the next quarter except the numbers. In that case, I don't want to create all these equations again. I can just move or copy, create a copy, and create a copy after your last worksheet, that is 124 and 125A, and as you get a create a copy and put it after 125 A. That is, I just wanted to create a copy and I created a copy of the same thing again. In this copy, you can change the second quarter budget, change it to second quarter budget, and change the pairs to 1,500, 1,000 and 450. You see, it actually changes everything accordingly. So you don't have to create it from the scratch. You create a copy of the first quarter budget and change the value of sales volume pairs, and you can create second quarter, third quarter and fourth quarter. In creating the fifth quarter budget, you are actually creating in creating the fifth quarter budget, you can actually create a copy of this and repeat in the same way. Unlike in the textbook, we can also do it. You can create a copy of the annual budget just by copying the fourth quarter and changing the low priced option to, so in this case, the number of volume or sales volume in pairs will be the sum of first quarter, second quarter, third quarter and fourth quarter. So I'll go back to first quarter, plus second quarter plus third quarter plus the fourth quarter, and enter. You get 7,200. Since the formulas are same, it is going to be the similar one. It will automatically calculate the right answer for this problem. So I'm going to check. once again, so it should be first quarter is 1000, sorry. So the fourth quarter, our annual budget is first quarter I have to repeat one more time. That is from the first quarter equal to this one, first quarter budget plus second quarter plus go to that third quarter and select the third quarter plus go to the fourth quarter and select the fourth quarter and enter. 6,700. And okay, delete. So I am creating the annual budget from a copy of that. The next one equal to medium priced. Medium priced is going to the first quarter plus second quarter plus third quarter third quarter plus fourth quarter. See, you should be very careful in selecting the right information. So equal to again go to the first quarter, select first quarter plus second quarter plus third quarter plus fourth quarter So first quarter, I'll repeat it. So see the problems you enter into. Sometimes when you select it, you should be very careful when you are selecting it. So this is the first quarter plus the second quarter plus the third quarter plus the fourth quarter, enter. Okay, now we got the annual budget summary for the low priced and the high priced, medium priced and high priced options. So the revenue is same, revenue equal to again first quarter revenue plus second quarter revenue plus third quarter revenue plus fourth quarter revenue, enter. So we got it for revenue for the 3 quarters, and then the material cost is equal to the first quarter. Again go to the first quarter material cost plus the second quarter material cost plus the third quarter material cost plus the fourth quarter material cost. Enter. It is the material cost for the 3 quarters. Similarly, we found for the 3 options. Also, we found the overhead cost of the subtotal is the sum of these 3. Sum of these 3. And similarly, we have found the sum of the other 3. As simple as that. Once you get that, the selling expense is again equal to the sum of the first quarter. Selling expense is the sum of the first quarter plus the second quarter plus the sum of third quarter plus the fourth quarter. Enter. And once you have that, I copied it across, and I got for the selling expense of 3 options, and a projected earnings is calculated this way. Once you do that in the examination, in the assignment, you have to choose which option is best and why. And after that, for the examination, for the assignment, please remember these values are completely different. You have to go to page number 69. If I remember it correctly, yes, it is 59. And there are only 2 options. You are looking at only 2 options. It's so simple. And you have to create first quarter. First quarter, second quarter, third quarter, fourth quarter, and finally the annual budget, which we did now. Once you do that, your job is done. Good luck with assignment. Hope it helped you to understand the annual budget and the quarterly budget, which we talked about in this video. Have a good day.